Good morning. This is Sunday, I believe 10/2. Wow, good riddance, September. We have a lot of tickers to cover, so I'm just going to dive in. I'm going to make one comment that applies to everything, almost every ticker here. Notice I have my chart says 1W, which is 1 week, which means that every candle is 1 week, so that's a lot of years, 5 years worth of data. I find it necessary to go that way on a lot of the charts because of this correction. You don't have, if I go to 1 day, in most cases, I don't have enough data to see where we were here before. Therefore, I have to go to 1 week and zoom out to show us perspective. Okay, I hope that's understandable. I'm also going to make the comment, the general comment, that this week I will have a separate video, which I beg you to not skip tonight or tomorrow morning before the market opens. We have so much potential for this week to be either the end of the shit show, there we go, cussing right off the bat, or it's going to be, it has the potential to be either a nice bounce or the start of a crash. So, and I'll have details. So be ready for the week to be potentially violent in either direction, which means what? Which means I shouldn't have, you shouldn't have, no one should have good conviction beyond belief. Like I wouldn't add to current risk. I may take positions, new ones, and not all in. But if I have a position and it's suffering, this is not the time to add anything to it because I don't know what I don't know. And we're coming to a place where something's got to give. Either we go down to 30, 35.20, then 32-ish, 33-ish, and we're talking 2,500 below that. So those are the conversations. Or we start with a 1.2, 1.5 bounce Monday, Tuesday. All right. Having said that, let's dive in. These are the tickers that you guys asked for, and I broke them up into three. I will break them up into 3 videos of 45 tickers each. They are alphabetically ordered. Alcoa, not for me. It's falling into support, but this stock chart is hideous. This was 2018 crash. We came into COVID at an all-time high for stock market, and this one was not, falling out of control already. Not for me. There's no reason why it's up here. If there is, it's not for me. That's for sure. It has support. It is a support zone. American Airlines we can delve into closer. That's a daily chart. So it has support where it's at, and it bounced off of it. The good news is that it's holding above its September lows. Relatively good performance. Rather, the stock market itself is not doing as well, but it's right there. So yeah, it does have support. It's very ginger. So if it loses 11.9, it may go to 11, maybe lower. If I'm already long, I wouldn't add. And if I'm looking to get long, I could nibble as long as there's no earnings. There are a lot of, this is not support. This is resistance. There are sellers lurking above. Where? Everywhere. I'm going to put it right here. So if we rally to here, this could be a trigger, but I expect it not to be easy. All right. Apple, of course, the one that started the debacle based on some update that, which in my opinion is complete BS. The headline was complete BS. Like Apple's going to ever have a sales problem. It does not have a sales problem. Its clients love to spend money and they don't care. So if you're an Apple user, you overpay and you're happy because you love your Apple machine. That is the constant I hear from every Apple user, which I'm not. But anyway, the company is not in trouble. The headline was ridiculous, but it did trigger this, and the downside is in the 122 area, target-wise. It doesn't have to go there. It will go where markets are going. Maybe it will drive the market. So if I'm assigned an Apple share right here, I'm not panicking, and I would immediately sell calls against it, covered calls against it. Can I sell a put spread? I could, but I'm not rushing to. It will go by way of the market. What I would do is I would build a small position for a trade, a swing rally back into the earnings. Usually it rallies into its earnings. So if I was thinking I wanted to hold calls or call spreads into the earnings, I would build one now, and I would use November contracts. debit call spread, for example. AbbVie, this seems like the opposite of Biogen. I wonder if they were competing products. Like, did AbbVie get beat out by Biogen towards the same medication? I don't know. Biogen had a huge spike. This one is falling into must hold. If it loses this one, it's going to 126 or lower. It's going to open the floodgates. So if I'm long, I would put a tight stop, either at levels or at X% loss. I would not let it get away from me. Adobe, we'll see if the credit put spread survives. This one I have to zoom out. The company is not in trouble. Financially, it's still good. It generates a lot of cash from operations. It has this bounce, which is 255. So I'm confident that there are buyers below this level, at or below this level. So I'm not panicked, but the price action is not good. It will follow markets. Affirm, let's flip back to shorter term. So this is a company whose business is pretty good, and I know the business style, and I'm confident that they will make money in the future. I can't go to Amazon to check out, or any other place, without seeing their name on there. Pay for it now, or use payments using Affirm. It's weird, but anyway, it is there. I've looked into them once, and now they won't leave me alone. So here's the deal. There is a risk from regulatory headline in the US, which I think is ridiculous. They are trying to stop buy now, pay later. That's like what the US was founded on, debt, right? So it's not good that might go away. So SoFi is PayPal, all these companies are a threat. I don't think it'll fly. But anyway, Affirm has support into 16. So if I'm long here, I'm confident that the support level will hold. Barring some headline. It will follow markets. If I wanted to own it, I can nibble. How? I would just buy shares, 20% of my shares. I would sell puts to own shares if I wanted to own shares. Instead, or I can sell a put spread in order to own shares, and if I get assigned, I would take the shares and then decide that maybe it's safe enough to sell the put that I bought part of the put spread. I don't know what that is. It's probably not for me, so let's zoom out to a weekly. Yeah, this is an exit point, not an entry point. I don't care what it is or what it does. When a stock comes back into this prior fail zone, buy. Not for me. AMD, also not for me. But check this out. I've been complaining about AMD ever since these candles right here. Let me show you what these candles look like on a daily basis, and then you'll know. If you've been with me for a while, I've been saying they built a castle on top of a stick with 2 holes. Well, they just covered almost both holes. So technically, it could still fall to 55. But somewhere up here, I said, I bet you this year we will be able to buy AMD below 60, in the 60s. And here we are, in the 60s, in the low 60s. So now it becomes a compelling thing. However, I am afraid. This Head and Shoulders says it's going to less than 0, which clearly is not the base case, but it does say that the threat may or may not be over. All I know is if we bounce, look how many bounces were sold. Bounce, sold, bounce, sold, bounce, sold. If we bounce, what is that? That is a lot. That is not my phone. Where did that come from? If we bounce, we're going to sell off. We have the potential to sell off. And if we make a lower low from the place we bounce, we're going to the low 50s, high 40s. At some point, if the market's correct in the next couple of weeks and this one collapses, I will do what I did during the pandemic, which is sell puts at 20 and collect $2. I will do that again in size. Not yet. I can nibble here. If I'm long, it's too late to panic. If I'm looking to get long, I would rather get long the S&P because it doesn't have any issues that are specific to this sector. Look, rallies are going to be sold. So I have sellers into 70, 71, 68, something like that. Good company. I'm not dissing the company. Amazon is pretty lean and mean. I would like to be long Amazon. I wish they closed this gap. So if Amazon comes to 110, I would get long. In fact, I'm going to put the alert right here. Rallies will face sellers somewhere around 120 and somewhere around 125. There is a target that would bring it to 124 and 128, but maybe the sellers will be too huge. Let's go to a weekly to see where that stands. So you can see how all these buyers are waiting. You can see how this was a breakout from when? April of 2020. So I said the world went crazy right here, which was the fall of 2020, and then we went to the moon. Amazon gave up the moon and now is back close to Earth. Apple is not. Tesla is definitely not. Microsoft is not. So if we're going to have a market crash, the incremental sales are going to come from those big guys that haven't dropped yet. Apple, Tesla, huge, like 75%. Microsoft, etc. So those are the important stocks to track. This one is lost a lot of weight already, so it's less risky from here. Okay, so I have a note that ARKF and ARKK are potential buys here. This is a weekly chart. Look at it. I mean, these are good companies inside these ARK ETFs. For example, ARKK, 11% is Tesla, but therein lies the problem. 11% is Tesla, and Tesla is still 75% above the pandemic breakout. Yes, 75%. So on paper, Tesla can just collapse from here and be under $200 and not be at the pre-pandemic level. But that is not the likely scenario, or at least that's not my forecast. So I can go long this stock for $15 and see if I can get a rally up to 30. Yep, there is that potential with huge resistance at 18, at 22, at 26. Every level, you're going to face a lot of sellers. So it is going to be pretty tricky to navigate these treacherous waters. But how do I do this? I get long the shares, or sell a put to own shares, or sell a put spread out in time, say October or November, below current price. And or I would buy a call spread. Shares are the safest because time is not an issue. Selling a put is just as safe as shares, even a little bit safer because you're buying shares lower. And I would say to myself, I'm willing to risk X% and then I'm out. And that would be the play on this one. ARKF and ARKK are about the same. Same comments. Look, these are weekly candles. So same comments exactly. Asan, I don't know much about the company, so I will address it from a daily chart. The good news, it's relatively better than the market to its recent lows. September, we are higher. Bad news, what is this? That is a wall in front of it. So until they clear 29 or 30, there are sellers there. But here's the good news. If they do clear 30, they could get the 44. So if I'm long shares, I'm not panicking. Asan is doing okay from that perspective. So AXP is American Express. Must hold, otherwise much lower levels. Let me see here, W. So you can see the pandemic, they recovered. So they just got back to the pandemic level. I put an alert for myself at 110. I should make it higher. Under 120, around 120, 123 or lower, it becomes really attractive to me. Up here, I think it could come down to like 110, 108. If they lose this support. Good company though, you can't argue with it. Almost exactly the same comments for Boeing. So my fear for Boeing are the airlines. How strong are the airlines? Because they are the ones that bring it money. Boeing does not have a sales problem. They're overbooked for years on out. They're an oligopoly, a duopoly. But you have this bounce that needs to hold. If not, they will test this one. I don't think this is a head and shoulders, because if it is, then it's going to minus. Also not the likely scenario. So it could bounce back to 160. So if I wanted to get long Boeing as a proxy to going long markets, it can work. So a bounce off of these orange lines will face sellers at 145, 146, harder sellers into 165 and above. And I'm not going to talk about clearing this one because that's putting way too many carts before horses. The next rally will be sold. So I can't take the trade for the rally, but I should get out. Baba, I'm long because of James in the live room. He said, I forgot Wednesday. He said, Baba looks good. I said, let's get long. On a whim, I bought calls for October 21st, and we got this giant rally, and then I locked my profits. A lot of people exited. It was like 40% in mere hour. So it wasn't anything I could write up. It was for active traders that that happened to be there. But nevertheless, I'm still long. I booked profits. It is still green, believe it or not. And I swore I wouldn't want to do Chinese companies, but I did it on a whim. Thank you, James, for bringing that to me. And it comes up to 88. That's where the real selling starts, anywhere between 85 and 88. Let's hope it gets there, just because it will show that risk appetite is not dead. So every rally is sold in recent history. So I should expect this rally to be sold. If they lose this one, they're coming to 68. I don't have a pile of cash into it, but the win turned out to be substantial, so I'm happy with that. BAC, I'm not a fan of banks, especially that Powell is out to break them. And they are in the face of his weapons, that dork. So I can get long BAC against this one candle. This is a daily candle. If we fall below this candle, I'm out. There might be other support levels, but I don't want to know where they are. What the heck is that candle? Look at it. That is so bizarre. Gap, not even a trade inside the 30 line. So this 30 line is very peculiar. Look at it. So this better be a turning point for Bank of America. If I'm long B of A, that's not where I exit. If I'm looking to get long B of A, I could get long B of A here with a tight stop. Below here, I'm out. Luckily, it's cheap. In fact, I'm going to add it. It's cheap, like as in out-of-pocket expense to be long as $30 stock. I can buy in-the-money calls out in time, or I can buy shares, or I can sell puts to own shares, or sell a put spread to own shares and have protection. BBBY, I would never trade it. I would never invest in it, but I could trade it, and it's very active. So if you're an active investor in it and you're trying to make money off of it, I suggest you join the live room. Look how orderly they're selling in a descending channel. So mark 2 lines. First line of support is 6. Second line of support is 5.8. First big trigger is above 650. You might get to 7 or 7.2. If you don't know what you're doing with the charts, don't touch it. Exact same concept here. Exactly. One letter off. Are you kidding me? They're both dying companies. This one less so than the other one. What do I mean? Just look at the P&L. It's not an opinion. It's fact. That is quarterly. Look at the annual. Destruction. So I don't know what Best Buy is like. Nope. Best Buy is not dying, but the stock is. Okay, Biogen. I don't know who requested that, and I don't know what you expect me to say. Are you trying to ask me if you can get long here? Definitely not. Whenever a stock gives me this much so quickly, out. Smell you later. If you're trying to short it, at your own risk. I don't trade biotechs from that perspective. What biotech stock I would trade right now? The XBI or Labu. Somebody asked for them, and I'll answer that in a little bit. At this point, I can't get long. If you want to short it, you can to fill this gap, but I have no idea what the news was. How would I trade it? I would buy a put spread out to November and see if it gets filled. So if I buy it here, I have a chance to double my money if it falls back to here. Beto, I've provided several long entries for Beto, and they all provided immediate profits, right? I still own crypto. I have not sold my crypto. In fact, I locked my crypto the other day. I shared my account, and somebody said, we only have 2.5 Ethereums. That's because the rest are locked, and they don't show up as in my wallet. They're in my platform. They're locked. So I'm not tempted to trade them. It's a long-term investment. And I'm a believer in crypto. So short term, I can trade Beto because it's a proxy to Bitcoin. And this is a pretty bizarre spot. So until they clear 14, it's at risk from losing this and coming down to 8 or 5. Yeah, there are people out there that have a forecast to 11,000 Bitcoin, which would bring it down almost 40%. So I'm thinking somewhere around 7. And I'm almost wanting it to happen, but I don't want people to lose money because I want to load up. Okay. Every crash in Bitcoin provided a 10x opportunity. And I have a set amount of money for high risk trades, and I put them in my crypto account. That's the money I would pour into. I'm not pouring my life savings into it. I'm pouring a substantial amount of money, but that is not my nest egg. That is my high risk basket. I will dedicate it to Bitcoin, and maybe Ethereum. Split it between Bitcoin and Ethereum. I can use Bito, or I can use Grayscale. Has two tickers. One is ETHE, and it's a regular trade. It trades regularly like a stock. There's no options. You just buy the stock. And the other one is GBTC for Bitcoin. All right, BNTX. This is good relative strength, holding the floor, unlike the markets. So if I'm long, I'm comfortably long as long as this is holding up. There will be sellers into 150. I may do a whole thing on crypto. Maybe an in-person crypto seminar. Whoa. Interesting. I'm going to make a note. Sorry, but ideas come up at the odd times. BX, I'm interested in trading Blackstone. Now, Blackstone, we traded it well recently. I was tempted to do it again, but this makes me hesitate. If it wasn't for this earnings report, I would get long Blackstone. But because of this earnings report, I wouldn't. CAT. A CAT I don't trade. I've told you before, I have tickers that beat me. CAT is one of them. I can chart the hell out of it. I just can't make money trading it. So, for example, this is a weekly chart. Not for example. This is a weekly chart, and you can see that there's a descending trend. Do I have it? Well, there's the sellers are in charge over the weeks, right? And you can see that happened here, and the breakout from it was violent. Okay, you see that? Descending trend that looked like it's going to hell, and then boom, broke out from it. Let's see where it broke out. Bounced off of, look, resistance, breakout, boom, fell into that part, right? Let's see if we can mimic it here. Resistance, a whole bunch of resistances, and then a breakout. It's close. It's not as clear as this. So in the next, I don't know, $5 to $8 lies a buying opportunity for Caterpillar to rally back into 180, 85, fail a little bit, come back into 200, fail a little bit, come back into here and break out. Well, that's looking way too far. How about trying to say that right here there's support to swing back up to 180, 185. It's worth it. So how would I implement such a strategy? By selling a credit put spread to leave room because I don't know exactly where I'm at. And then you have this bugger. I don't want to sell a credit put spread into earnings. So if you can sell one before earnings, but here's the risk. Companies now are finding it funny to pre-announce, like 2 weeks earlier before the earnings. Yeah, we're going to suck. And then you get collapses before the earnings. So the way I would do it, I would plug my nose and go out to November or December and sell a put spread down here. And if the collapse happen, trust that the buyers will show up. I mean, the P&L is okay. It's not for me, but that would be the strategy. CCL, definitely not for me. So if the cruise companies are rallying, the S&P is rallying. They're not going to rally on their own too far, right? And CCL had a headline of sort, whatever, collapse. And it took the whole sector with it. So now I have to zoom out to a monthly chart to see when it was here before. That's not good. The support is so old that it's ineffective. 1995. 1995. This is where you say, I don't know what the fudge is going on here. Forget it. I'll do something else. Now, if I'm long the stock, it's clearly too late to panic. If I'm looking for a high risk, low dollar out of pocket stock that I can hold for a year and maybe it doubles, this would be it. If I wanted to buy 1,000 shares, I would buy 200 now. If I wanted to buy 500 shares, I would buy maybe, a 20% of it, 30% tops. Leave room to add so you'd be in it at $5 rather than $7 if it does continue to collapse. Look at the volume with which it fell. So do your homework. This is not a pretty sight, not for me. Okay, where are we at? I don't know what that is. This is not an obvious entry. Good relative performance, but I don't know anything about it, and it's rallying into prior fails. I would rather get long into this stock at 25 if I was a fan. CMG, it's shortable almost. It is falling into this gap. The secondary target is like 1250, 1270, 1280. So this debacle could carry through after bounces. So here's the thing. If it bounces to 1560 and you're long, I would consider exiting or protecting myself because it could come down to 1440 and bounce again, 1360 and bounce again and finish the job to under 1300. All by itself, it won't do that unless the markets help it get there. But that's the stock. And this is a daily chart. So if I go to 120, you can see how it, once it lost this one, the downside scenario is about, let's go conservatively, 150 points. So somewhere around 1403, which puts it in that gap. Just to give you perspective. Costco, I like it. I like a long position into it here. Relative performance to this month is pretty good. Even though it has lower highs, they're trying to hold higher lows. So this is where the bulls and bears are fighting it out. If the markets hold, this one has an opportunity to rally back to 490 and 500, at which point it will face tremendous selling. That resistance spot right there is heavy. I should represent it with a box that is accurate. Sellers. Okay, so it does have support and another level of support and a level of support below that. So I'm going to move this guy to here. All of these are buy the dip opportunities while you recognize that the sellers are in charge short term. Okay, good company. I was there yesterday, spent some good money, and I'm going to go there Monday, spend some more good money. They have a TV for $780, a Samsung 4K. 75-inch TV. My TV is a zillion years old. Time to upgrade, I think. We'll see. What is this? Campbell Soup. Beware of the Head and Shoulders. I think it has a lot of support at 45. This company's stock performs really well even when the market is not. So it's almost like buying the VIX. This is not a support zone. In fact, this is a resistance zone right now. So I will change that to... And it pays 3%. Reward dividends. CRM, what can I say? If I get assigned shares at 140, I think where I sold my credit put spread, I will take them. The company is a successful company, the fastest growing company of all time. I think broke every record on the way up. Benioff knows what he's doing, even though he's not, I think, officially leading the company. But there is no short-term support. I'm just going to go and say, if the markets don't crash, this one will have a good rebound rally, or at least my credit put spread may have a chance to survive. Now, some people cannot say that I will take shares. What should they do if they have a credit put spread? They can roll it out in time to buy myself some time. The earlier I roll it, the easier it is to do that without any losses. Reach out if you need details. CrowdStrike, good relative to performance. This is an important candle for CrowdStrike right there. So 163 is important, plus or minus. And if the sellers are... where they failed is where I expected sellers, 173 to 175, 177. So if they can have higher lows and overcome 177, they're almost in the clear inside this ascending channel that failed before. This support is not support, it's actually resistance now, of course. Chevron, you know my story with oil stocks. Well, they're a lot better now. So they could bounce to 148 or 150. I would not expect this is easy to fill. I think this might not fill for years. Therefore, I would not buy shares or calls. If I sold a put spread, that's fine. If I own shares now, it's probably too late to panic. But it's still not for me even at this rate, at this level. Dear iffy stock, if I'm long, I would stop out below 325 because I don't know how low it goes. I just see a candle right here that's pretty important. I will highlight it. Inside of here, that should be a buyers. There are buyers lurking. Let's see if they show up. If not, there are better buyers down here. And there are, whoops, sellers here. Sellers, middle coordinates 300. I should update the list. Who is this? DE. So we will stop at HD, the first video. Okay, if you're new, this is how we do it every Sunday. I break them up into 3 videos. All right, what is this? Dick's Sporting Good. You know, it's the only sporting good in town, and let me see the sales. Growing, so good. This candle is incredibly bullish by saying, I have buyers here that are so eager to buy it. Look how hard it bounced. Meanwhile, there's this little gap here. I said it was vulnerable to here. Look how long it took them to get there after a huge rally. So I picked a good level and they fell to it. So that is support. If I'm long, I'm not exiting here. EVgo, kind of like a no man's land. It has support, it has resistance, nothing to do here except hold it if you're long. Ford, people are dying to get long. I get bombarded with requests about it. Why don't you just buy it and forget you own it if you love it that much? Because I told you my fears of Ford. I don't think they can do this transition without pain in the P&L. And if that pain gets reported, there's a big drop in Ford. Just for sobering fact, sobering fact is, years ago when I, with Benzinga, actually I sent out a note, when Ford I think was 7.1, 6.8. I said, this is a great American company. I want to own shares or calls out in time. And I bought Leaps. And they went huge because Ford went from 7 to like 16 or something. So I'm not a hater of Ford. I'm worried about the transition from fuel to electricity. They don't know how to make money. Compare them to Tesla. They're like, Tesla's doing 3 times as well, generating gross margin than GM or Ford, actually more than 3. So anyway, I'm concerned. However, technically this is a decent place to start a position. I would not go all in. I would not add to my position. It's just a stock falling out of control into a prior balance area. FBHS, I don't know what that is. Fortune Brands, yeah, I know what that is. I have no reason to engage in it right here, right now. There's no obvious entry point. This whole zone is supportive, so yeah, somewhere in here lies a buyer. So if you want to go against the 50, which is the heaviest point of volume, that's my only thesis. This is a weekly chart, 5 years. This is the busiest spot. So there are buyers into 50, into the $50 mark. Somebody asked for Fluor. And somebody asked for Fleur. I couldn't find Fleur anymore. Did it get bought out? So let's go Fluor. And on the weekly, this is a buying opportunity, or at least there are buyers on the weekly. Let's delve deeper. Yep, good relative to performance, but there are sellers into 26 and 27. So I don't mind staying long, just expect a big fight. FUV, this is not anything I would get engaged in. The stock is broken. You should do homework on the company itself in order to give you more guidance. The stock is not going to help you. General Dynamics, on the weekly, it looks okay. On the daily, it looks like it has support around 208. Now, if you lose 208, maybe you drop $15, $20. The next opportunity is there, somewhere around under 190. It's actually under 180 if you lose the support at 208. But I think there are buyers that could try to stop it into 190. GLD gold, I think there's a big long-term rally in gold coming that would bring it back to, I don't know, 165, 185. But we are so far away from it. First, let's stop the drop. Big candle inside this box. Very important short-term range, which means what? They're going to fight it out here. And I think if they get about 158, they're out of the box and they could start something fantastic. It won't be easy. GLD, I would go long via sold put spreads. and debit call spreads. The put spreads, I would do them for October perhaps, or everything for November. The debit call spreads will be at the money. The credit put spread would be normal delta 15 that I like to sell. GM, did I pass? No, HD. GM, same comments as Ford exactly. It looks technically more attractive just because I see a pattern that is trying to play out, although they haven't triggered yet. So if somebody wants to get long into this base, good. So as a trade, so how do I do that? As a trader, if I see a call I want to buy, or if I want to buy it at a certain level, the stock at 31, then I'll put an order offering 31 and see if I get filled on a bad day. So if I see a call that costs $1 and I say I'm willing to pay 80 cents, the order will not fill until the stock falls low enough to where that call becomes 80 cents, and then I'm long. This is where I say I got filled. So if somebody wants to get long into this with a tight stop, that would be the way to do it. As a trade, not an investment. I have the same concerns as Ford, although both can have a rally. What is this? Okay, so, that's not the gold I want. The gold I want is Barrick Gold. Where is it? I'm not seeing it. Oh. The company, Barrick Gold, good management, will track the price of gold to a degree, but it's also a company, so if stocks correct, this one will be at 13. It does have a lot of support. It does have machine support. It does have volume support, and it has a lot of resistance. So remember that gold opportunity, the GLD opportunity? I think this matches up with it. So if I'm long this stock, I'm not doing too badly. I like it. Whoops. Oh, that's because we changed tickers. Lost my place. All right, Google is next. Somebody asked for Goog. Same comments go for Goog. I chose Google. All right, let's see my comments on Google. I can buy a debit put spread to defend the stock. That was up here. So hopefully somebody did it. Means market correcting. That is correct. Markets are correcting if Google lost this one. And it's probably pricing this one out. Google is also high. It's way too high relative to its pandemic breakout levels. If it rallies, I sell it. I had that up here and it didn't rally, so I moved it down to here. If it rallies from here, I would sell it. Expect sellers. That's what I mean by that. Otherwise, the bears are in charge. Look at this correction. Wow. I don't know what this is. Okay, I'm going to give you a comment from somebody who's in the business, who is a member. She said that shipping rates are collapsing. I may have misunderstood, but do your homework on that front. And if that's the case, I wouldn't want to touch any of these high-flying companies that are logistics, okay? Yes, it has support, but this is potentially doable. Sellers up here. So if I'm long, I can wait to see how that performs against 14. Home Depot is the last stock here today. Not today, in this video. It's doing exactly what I drew. One of the scenarios was we will bounce, and then we will have to decide if we're going to do this after we bounce. So this is where we're at, leaving a gap here, which is not ideal. Having resistance, which is not ideal. Having, look, rally, sold. Rally, almost this. Look, bump, 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 bump. This is where sellers are here. So I'm not comfortable until we beat to 84 to 85. Okay. All right, I think this is the last. And so we will stop the video here and start the next one a bit later.